Welcome back, everyone. I'm Jordan Giesecke, and this is The Limiting Factor. This is part 13 of the Lithium Mine to Battery Line series to break down and understand what was unveiled at Tesla Battery Day. This video is the first half of a two-part series on Tesla's lithium clay plus salt extraction process. Today I'll explain why Tesla would get into lithium mining and why it's not far-fetched. In other words, I'll provide some balance to the fear, uncertainty, and doubt, aka FUD, that's dominated the narrative on Tesla's extraction process. Then, in the next video, I'll describe the specific technical challenges and potential processes involved. Before we begin, a special thanks to my Patreon supporters and YouTube members. This is the support that gives me the freedom to avoid chasing the algorithm and sponsors, and I hope will eventually allow me to do this full time. The links for support are in the description. Back to lithium clay. One of the key takeaways from the last video was that as manufacturing volume increases, production cost asymptotes at material cost. In other words, higher production volumes result in production costs closer to the costs of materials that went into the factory to make that product. With Tesla's new cell factory, the scale of manufacturing will be gargantuan, and the 4680 cells will get close to the material costs within a few years, slowing the rate at which cost improvements are made. This means that to guarantee cost reductions in the 4680 cell further into the future, Tesla must reduce the cost of materials entering the factory. These cost reductions can be done in three ways. First, they can change the chemistry of the cells to use cheaper materials. As we saw in the Cracking the Silicon Code video and the Tesla Cathode Deep Dive video, Tesla is doing everything they can to decrease the cost of the cell chemistry. Second, Tesla can lower the cost of materials by negotiating lower prices for the materials. However, there's always a limit to how far that negotiation can go because the companies that produce the materials take a profit. Third, Tesla can move upstream to increase their vertical integration. Moving upstream means producing materials in-house rather than purchasing them. This eliminates the profit margin of the material producers. The first step in moving upstream is to produce the battery cathode. The next step is to produce the lithium hydroxide that goes into that cathode. The final step is to mine and concentrate the raw lithium that's used to produce the lithium hydroxide. At Battery Day, Tesla confirmed they'll be doing all three of these things: cathode production, lithium production, and lithium mining. This means that in the case of lithium, Tesla is swallowing up the entire supply chain from lithium mine to battery line. We still have to see what they do with nickel, but things are developing quickly there, especially in Indonesia, and we might hear more soon. I expect Tesla's cathode factory and lithium factory to go into production within the next 2 years, and 3 years at the most. I make that prediction because, in my view, Tesla needs to produce those materials in-house by 2023 if they want to avoid the battery material shortages that will start to occur in the next few years. As usual, it may take some time to ramp production, which means the factories would need to be built by early 2023. Benchmark Minerals has already reported that Tesla's lithium hydroxide production is targeted to begin in Q4 of 2022, which means Tesla is right on track. For the time being, I'm assuming Tesla's 4680 factory is using off-the-shelf cathode materials which contain off-the-shelf lithium hydroxide, and this is what Tesla will be using for the first year or two in the 4680 cells. Tesla may have small-scale lithium hydroxide and cathode production at Kato Road, but it may be for process testing rather than to supply material for the 4680 pilot line. At this early stage in the 4680 ramp, using cathode produced in-house might result in higher material costs and reduced consistency. Using off-the-shelf materials would de-risk the 4680 ramp. If I'm wrong here, and Tesla is already doing trial production to support the 4680 ramp, it would put them in a great position to have the lithium hydroxide and cathode factories running by the end of 2022. My view is that the lithium mine will take longer, and we won't see it until 2025 at the earliest. On Battery Day, Tesla advised that they have the rights to lithium clay in Nevada. I'm assuming they mean mineral rights. Mineral rights mean that Tesla can exploit the minerals in an area and doesn't necessarily mean they own the land. They claimed that the land area was 10,000 acres. This means that Tesla has either signed a deal to access the land of a current lithium clay project, or that they've gained mineral rights to a new property that hasn't been publicized yet. I did a quick search of lithium clay projects in Nevada, and all of them were far less than 10,000 acres. If I'm incorrect here and you know of a clay project of that size, let me know. If there are no current projects the size that Tesla is claiming, it leads me to believe that Tesla has found a new deposit. I've checked the Nevada Division of Mines open data site, and there are about 10,000 lithium claims in Nevada. This means that to find a clue where Tesla's mine is, it could take days or weeks of trolling through the public data and checking the backgrounds of the companies that have made those claims. As we discussed earlier, if Tesla wants to drive down the cost of their cathodes to the lowest cost possible, their only option is to produce lithium chemicals in-house. Tesla claims that producing lithium in-house will save them 33%. Let's take a closer look at that number. Lithium hydroxide prices can vary depending on the terms of the contract, but most of the estimates I've seen are $15,000 per ton, with production costs averaging around $6,000 per ton. This gives us a rough profit margin of 60% and is similar to the 40 to 70% profit margins I've seen from various sources. Why would Tesla only be seeing a 33% cost reduction instead of 40 to 70%? I see three reasons. First, Tesla's process may simply be more expensive than the processes used by their suppliers. Second, it could be that Tesla gets a better deal on their lithium than anyone else and is only paying 33% above the production costs of their lithium suppliers. Third, it could be that the 33% only included in-house lithium hydroxide production and didn't include savings related to doing the mining in-house. Regardless, 33% cost reduction for a key material is well worth Tesla's time. Tesla should be able to reduce the cost of the active material in their batteries from $25 per kilowatt hour to about $20 per kilowatt hour for active materials at the cell level by using a nickel plus manganese cathode and Tesla's in-house cathode production. Lithium that's 33% cheaper would save another $1 at the cell level, or 4%. Why so little? We're reducing the cost of the lithium by 33%. Lithium makes up 25% of the cathode cost, and the cathode cost makes up 50% of the cell cost. 0.33 times 0.25 times 0.5 is 0.04, or 4%, which is $1 per kilowatt hour when using $25 per kilowatt hour as the starting point. This results in $19 per kilowatt hour for active materials at the cell level versus $20 per kilowatt hour. Again, this number is conservative, but going any further with the calculation would be splitting hairs. $1 doesn't seem like much until you factor in scale. If Tesla produces 200 gigawatt hours per year by 2025, and they save $1 per kilowatt hour, that's a savings of $200 million per year. Needless to say, the mine and processing operation would pay for itself in short order. By 2030, at 2 terawatt hours of production, it would be saving $2 billion per year. The $1 per kilowatt hour cost savings may or may not have been included in the 12% cathode cost savings noted in the Stacking It Up slide. I don't have any evidence that the 12% did or didn't include the 33% lithium cost reduction. But as we saw in the last few videos, the 12% cost savings can be fully accounted for by changes to the cathode chemistry and in-house cathode manufacturing. The other potential area that Tesla may have sandbagged is the 33% cost reduction itself. If it applies strictly to in-house lithium hydroxide production, they may have been able to eke out another few percent from the lithium mine. Why only a few more percent? Most of the margin on lithium hydroxide is added at the lithium plant rather than the lithium mine. With that said, if Tesla has the entire lithium production process in-house and on-site, it may offer opportunities to reduce costs by looking at the end-to-end process, which will be covered in the next video. In fact, Tesla may have to set up separate lithium hydroxide processes for the concentrates coming from Piedmont Lithium and for the lithium clay. This is because lithium concentrates from different sources require different treatments. It might even mean lithium hydroxide processing on site at the clay mine, which makes more sense to me and will be covered in the next video. If a lithium mine would only save Tesla a few % on material and complicates Tesla's business model, why would Tesla get into mining? Elon hates when any other company has control over the destiny of his companies. The impression I get out of the mining industry is that it's bare-knuckle capitalism. It's a difficult, dangerous, and dirty industry with big risks and big rewards that probably has a thick-skinned culture reflecting those business realities. I don't see negotiations on material supply and price being timid. Tesla needs vast quantities of lithium, and anytime Elon needs more, it's back to the negotiating table with mining companies that know they're the lifeblood of the battery boom. Or it may be that Tesla isn't really in a position to negotiate much and just has to take the market price and swallow a margin of 33% or more. Either way, it probably chaps Elon's ass. Tesla's goal is to accelerate the world's transition to sustainable energy. If outside forces control Tesla's supply of lithium and they have to pay a 33% or greater margin on lithium chemicals, that weakens Tesla's ability to execute on its mission statement. As one person commented at Battery Day, the spice must flow. Lithium will be used in every chemistry Tesla proposed at Battery Day: LFP, nickel plus manganese, and high nickel. Full vertical integration of lithium production would put the power to scale rapidly in Tesla's hands. If I had to rank Tesla's motivations for getting into mining, the primary motivation would be to gain direct access to the materials Tesla needs for exponential growth, followed by cost reductions. It may have been an attempt by Tesla to negotiate for better lithium prices by indicating increased lithium supply. If that was the intended effect, then it didn't appear to materialize. Lithium stocks took a hit the next day and have since skyrocketed, and for good reason. As Elon stated at Battery Day, Tesla needs all the battery materials and batteries that Tesla can get their hands on. That sounds like a terrible negotiating tactic to me, and instead sounds like he's calling for all hands to the pump. As a final point, Tesla tried to purchase a lithium producer in 2014, but the deal fell apart. My guess is that what we're seeing now is the next logical step. Tesla got burned by attempting to buy an overpriced lithium producer and decided to develop a process in-house for pennies on the dollar. That is, Tesla isn't starting from scratch in 2020, and they've been working on this for 6 years. This leads us to the next big point of this video. There's been a lot of criticism of Tesla's proposed clay plus salt extraction method, specifically whether it's a bluff and whether Tesla has the expertise and knows how hard it is. Let's debunk that by taking a look at Tesla's track record and the skill sets they have in-house. First, Tesla is able to rapidly develop new technologies at a breakneck pace. Why is that? It's because they live in the machine shop rather than in PowerPoint. My experience in large organizations is that risk-averse middle managers want proof of something working before anyone has tried anything. This is the slowest possible way to develop solutions to complex problems. Ideas need to be tested against reality on a day-to-day basis, with no attachment to what the final result should look like. Too much time in meetings results in fewer tests against the ultimate whammy hammer for bad ideas, which is reality. The engineers at Tesla also don't need to raise capital or convince investors to trust their idea. Tesla can create multiple prototypes a year instead of spending a year or several years on a single prototype. The net result is that Tesla can make as much progress in 1 year as other companies can make in several years. Tesla creates results rather than documentation. What about expertise? Let's hear from one of Tesla's former engineers, Ryan Melsert, who's now CTO of a promising battery recycling startup, American Battery Technology Company. Ryan worked at Tesla from 2015 to 2019. Bear in mind, what Ryan is speaking about in this clip is battery recycling. However, the skill set required for extracting lithium from battery waste is the same skill set that's required for extracting lithium from mined materials.
In our latter 2 years within Tesla, we ended up founding a battery cell material processing group within the R&D division. And there we were really working with unconventional resources throughout the world. different types of lithium and cobalt and nickel resources in trying to develop first-of-kind systems for how to extract individual elements from those resources, first-of-kind systems for purifying them, how to convert them into precursors, and then how to actually make our own cathode hydroxides and active cathode material from those unconventional resources. We were productive in doing that. We presented to executives many times. It was approved to build small pilot facilities many times, and never really rose above the attention or the capital requirements to move forward within the company.
Tesla didn't progress the recycling efforts Ryan speaks of here, but this makes sense because, as Tesla said at Battery Day, they don't expect to see large volumes of recycled batteries for another decade. Until then, it looks like Tesla will be partnering with Redwood Materials using a basic thermal process. Regardless, Tesla clearly has the skill set in-house, and as of a few years ago, they were playing around with prototype processes similar to the processes required for extracting lithium from clay. A special thanks to Jesse Mather-Moore for sharing the Ryan Melsert video with me. You can find it linked in the description. So why would people call into question that Tesla is able to create their own process? That depends on the person and their motivation. First, for most people, it seemed extremely far-fetched because Drew and Elon made it sound so simple. Even if the idea behind the solution is simple, it would have taken some time to figure it out, and it'll take a massive effort to implement. If the comment comes from the mining industry, it's safe to say that there's an agenda there or some projection going on. The mining industry has established flow sheets for processing lithium, and they might see no reason to change those flow sheets. This also explains why an innovation like clay extraction could come from Tesla first. Tesla doesn't have a vested interest in an existing process. From Tesla's perspective, it's just as difficult to get into hard rock mining of lithium as it is to process lithium clays. In fact, it makes more sense to develop a massive resource that's within a few hundred miles of their major facilities. Finally, despite what was said on stage, the ideas involved in salt plus clay lithium extraction aren't new, and I've found examples in the research. Research is different from implementation, though, and processes can be joined together in a number of ways. What Elon and Drew may have actually meant by new is that Tesla's developed a first-of-kind production process from the perspective of the end-to-end flow sheet. More on this in the next video. In summary, I think Tesla's clay process wasn't just a ruse or a negotiating tactic. It makes sense for Tesla to have serious and solid plans to get into lithium mining. If lithium suppliers can provide Tesla with all the lithium it needs and at a low price, then this might change. But is Tesla willing to risk that? After Tesla got burned in 2014 with a failed acquisition of a lithium production company, they probably learned their lesson and decided to develop a process in-house. As we saw earlier in the video, Tesla has had engineers working on projects that require the same skill sets for years. Next, Tesla gets things done by ditching the paperwork and focusing on iteration and testing. I plan on doing at least one video on this in the future, and I think it's the most important legacy Tesla will leave. An army of engineers is being unleashed into the world that know how to develop production technologies rapidly. Finally, Tesla has a clean slate to work from, and they aren't tied to legacy processes. This frees them to take the best path for their skill set and needs. In the next video, we'll take a closer look at how Tesla could extract lithium from clay. Lithium mining is far from my core expertise in batteries, and this shouldn't be considered a deep dive, but I can shine some much-needed light on the topic so we can all understand the challenges and solutions better. If you enjoyed this video, please consider supporting me on Patreon with the link at the end of the video, or snag something off the merch shelf below. I'm also active on Twitter and Reddit. You can find the details of those in the description, and I look forward to hearing from you. A special thanks to Shank T, Jim Holden, Charlie, Tim Elmeet, Sten Carlson, and Jim for your generous support of the channel, my YouTube members, and all the other patrons listed in the credits. I appreciate all of your support, and thanks for tuning in.